Good morning, guys. Okay, so I'm saying there's a massive trade coming our way with a lot of potential. So, in short, you can look at all the setups I've been sharing with you guys on this channel, the Trade for the Living podcast, about how we can navigate Bitcoin and make some really good gains out of this. So, at the moment, you guys should be in a short. And as I explained to everybody a little bit earlier, that I was looking for a tighter entry. So, last night, like an idiot, I missed out. I wasn't in front of the machine, and it happens. I was busy doing something around the house, and I ended up skipping out on this trade. So, it was so frustrating as it can be when these things do happen, missed opportunities. But I believe that there's another opportunity going to come our way, and I want to share that opportunity with you guys. Okay. In the chat, everybody, good morning, Rune, morning, Dreamcatcher. All the other regulars, say hi. Give me a 999 just because it's Friday, not Friday. and then let's go 999, go 999. Nice, Jason in the house with me. Okay, so let's talk analysis real quick. So I'm going to take away the setups just so that we can just kind of track in where we're at. So the main setup that I was kind of tracking with you guys, or the momentum play that I was moving, is that I was expecting that the market's going to reject in this area. Why? Because this is the highest probable zone for hidden bearish divergence. So the simplest way to kind of educate and share that knowledge with you guys is say the market can trend up or down in a five-way structure. There's a few rules. I'm going to simplify the major ones. 4 doesn't go above 1, okay, for this to be an impulse. And remember, the same will be if we were to track them bullish. So it doesn't matter, okay? Let's just switch that back. That's the one rule. And then the second rule is typically between your 0.2 and your 0.4, the RSI will do the opposite. So if I were to draw the RSI down here at the bottom, just to give you an idea, the RSI will make a high, and that will make a higher high, because then you'll have hidden bearish divergence, a continuation divergence, okay? And normally how I would mark that out is I'll draw a line and I'll put a hidden bearish divergence label on it there. But now the calculation, over time we found, if you look at where that is in relation to the low, okay, and the amount of retrace that is expected. Now, yet again, remember guys, whether it's bullish or bearish, doesn't matter. The amount of retrace that is expected has got a statistical number, and it's that fib that I used with you guys here. Okay, can double click on it. There it is, 618. It's as simple as that. Okay, around that zone, that 618 for the hidden bearish divergence, that's typically where the reaction is. Now, there's additional things that we can do to narrow it down, because fibs, they're magical, but just as magical as they are, they can be extremely frustrating because it touches this time and the next time goes one level lower. So what I tend to do is then also is highlight the pivots on the RSI. Now, each one of these times when the price pivots away in an opposite direction. Now, when you do that, it gives you a very strong support and resistance level for the continuation and for the divergence and for that little bounce that you're trying to look for. So if you then look at that, and I put a vertical line on that area there, so I'm just going to smack a vertical line there, smack another vertical line there, and so forth. Okay. Now, as soon as you start doing that, you get really strong support and resistance levels. And that's then your confluence, because now you've got sentiment basically that tells you, we are not liking price when it goes above 87. So your buyers disappear. If there's nobody willing to buy anymore, the price cannot go up for that matter, okay? Then you've got your momentum that's telling you that statistically from this high to this low, that's a completed wave. You can see that on the RSI, because we went from one extreme to another extreme. That's a completed wave. Statistically now, from this point to this point, we can say that at least 618 would be the area where price is going to hit. Okay, so then we have more confluence around that level. Okay, and then from that point onwards, we can start waiting for momentum and retail to kind of agree upon this. Because remember, trading rule 101, everybody gets to be right occasionally for them to be wrong consistently. Magical little sentence that I picked up. I can't remember from whom, but kudos to that guy. Okay. So here we are at this stage. So we're sitting at that area. We're rejecting a below that resistance level. And the weekends is probably when there's very low user engagement, crypto engagement. I mean, there's 88 people watching me live today. It tells you nobody's caring. Okay, simple as that. So when that happens, you have chances for the limit orders or buy orders. They'll probably be scattered wider apart. More people, thicker limit orders, the market moves slower. Less people, more opinions, same opinions, but more scattered. The market can move faster between those big orders. And that means that we could potentially have this weekend another big little dump like this. See the resemblance? Drops, chops around, drops. Okay. Drops, chops around, drops. Okay. So that's why I'm believing that there's going to be a massive move. Now, the thing with technical analysis is I can go on this, I can Elliott wave this, I can Wyckoff this, I can make this sound extremely technical, and I can make this a real science boring class where you're going to just want to pass out. You know, my wife does. When I talk about my trading, she just lazes over like that. But we can do that. But the end of the end of the day, it's all going to boil down to you taking action. And this is a really good time to take action on the short. So I'm going to bring back the setup, and I'm going to say to you guys that potentially during the run of today, the market's going to do the following. It's going to give us a little bit of a shakeout. Fingers crossed. There's no guarantee, potentially. And it's in that area where you can then use this resistance again to drive price down lower and get a nice little run on this. Because this is definitely not matured yet to a point where I would want to take profit on any of that. Okay, there you have it. So let's see what Rob has to say. I'm always check out after streams, but just wanted to say hi for everything you. Rob, thanks for joining in live. I appreciate you, buddy. Let's see what Dean has to say. Hi to everyone, and especially to you, Rudo. Well, hi to you too, Dean. Thanks so much, man. Okay, so yes, I'm happy you find the explanation simple and easy to grasp. If you want more, if you want to dive in, trade with me, hardcore with me for a living, all you need to do is just get a Bybit account. Simple as that. There's the link in the video description. Get your Prime account today. If you have an existing one, what you can do is open one in any case. Just transfer your KYC on Bybit. You do it while you're logged into the exchange. I have a little a tutorial from Bybit here in the partnership tab in my Discord. So there you can go there. Partnerships, Bybit, and there is transfer your KYC. It opens the Bybit website. You can see how to do it. It's so simple. And then that unlocks the Discord. So you can actually use this thing. So it's not a white elephant, as I would say. And you can come and trade with me. In addition to this, you'll have additional tools like the buddy indicator and so forth. Now, let's talk about the buddy indicator and how that can make life easier on you. Okay. So looking at that zone, for now, the trend is very choppy. And as you can see, the coloring on the candles are that of an accumulation. So the buddy indicator comes with a little tutorial there, and it's in the form of the trade guide, where you can follow the color coding that it prints on the candles, accumulation, markup, distribution. And once you've done that, you can select the right market condition and then select the right emotion. There's an educational section on how that works as well. And then at that stage, once you have that, say bear market, say fear, it tells you what is the best strategies to wait for so that you get in on the right moves with the momentum. Traders, we have to trade with momentum. Okay, that's everything for me for today, guys. Thanks so much for taking time with me. So I believe that we're going to have a really good short going into the weekend. I'm hunting for a little bit of Friday exit liquidity. And you know, a bull trap, almost, if you want to say. So I want to hunt for that. Potentially we'll get strong bullish divergence. It's very hypothetical at this stage, but at that stage, I want to see price drive down and maybe go make that lower low. The daily needs that from us. So if you look at the daily, this is the buddy on the daily. There's where the buy zone starts for buddy at the daily, 80. Now, strong bullish divergence, on a trend like this. We've typically on the lower time frames done this, where we create strong bullish divergence, then create another strong bullish divergence with a more obtainable higher high, because this is a very higher high, and hidden bearish divergence keeps on hitting us. So we're trying to avoid that now with a lower RSI. So if we go lower still, it's a real bullish sign. That's what the short is for that to play out, so that we can still remain bullish on the larger time frames. Okay, guys, you have a lovely day. Thanks so much for taking time. If there's any questions, anything, drop them in the comment section. I reply to them as always. And I'll be seeing you this afternoon, potentially for another HODL stream where we're going to be looking at some more alts. Okay, have a lovely day. Cheers, guys.